Good day, we are great teachers, here to teach you accounting.
We are looking into control account in detail. 1. Control account.
What is control account?
Control account is a memorandum account, the balance of which reflect the aggregate balance of many related subsidiary books.
Memorandum account, also known as memorandum record, is a record that does not follow the same principle of double entry system. Control account reflect accounts which are kept on double entry system, but does not maintain a record of double entry system.
Control account is a summary account in the general ledger. They are kept for customers and suppliers' account.
2. What is the usefulness of control account in a business?
Many ledger are kept by various businesses, for sales or purchases, and to reduce the risk of errors, control account should be adopted.
It also helps to locate errors. Fraud will become difficult. The balance of total debtors and creditors can easily be calculated. It also allows homogeneous account to be grouped together. Control account can be divided
1.
into 2.
Total debtor control account or sales ledger control account. 2. Total creditor control account or purchases ledger control account.
Sales ledger control account is concerned mainly with debtors, purchases ledger is concerned with creditors.
Definition of terms in total debtor control account.
1. Credit sales. These are sales where there is a transfer of ownership before payment. Balance reflected in control account is extracted from sales day book. 2. Opening account receivables. List debtor balance draw up in previous period. 3. Returns inward. Goods returned from sales. Balance is extracted from returns inward day book. 4. Cash or check received. The money received from customer. Balance is extracted from cash book. 5. Discount allowed. Discount allowed to customers. Balance is extracted from discount allowed column of the cash book. 6. Closing account receivables. This is debtor's balance at the end of the period.
Definition of terms in creditors control account.
1. Credit purchases. Goods are purchased on credit. Balance reflected in control account is extracted from the purchase day book. 2. Opening account payable. List of creditors balance drawn up at the end of previous period. 3. Returns outward. They are the goods returned to supplier, balance is extracted from the return outward day book. 4. Check or cash paid. These are money paid to supplier. Balance is extracted from the cash book. 5. Discount received. These are discount received from suppliers. Balance is extracted from the discount received column of the cash book. 6. Closing account payable. It is the list of creditor balance drawn up at the end of the period.
Looking into contra entry known as set-off in control account. It occurs when a supplier is also a customer. The debt owed to a supplier who is also a customer of my business cancels the debt he also owes my business. To effect this in a control account, which entry are kept on memorandum record, credit total debtor account, with the amount set off, and debit total creditors account with the same amount set off, or the same amount cancelled out. Now unleashing the secrets behind the posting and control account. Remember, it is a memorandum record. It does not necessarily form part of double entry. Control account follows the same rule as debit receiver and credit the giver, but does not follow the principle of double entry, which states for every debit entry there must be a corresponding credit entry. That is why it is considered a memorandum record. Listen carefully, I am unleashing the secrets of knowing the account to debit and the account to credit in a control account.
for total debtor control account, or sales ledger control account. 1. Credit sales. Debtors who are customers receives the goods. This should be posted to the debit side of the control account. 2. Bad debts. Debts that are considered irrecoverable, it must be reduced from credit sales, in order to know the total debtors left, therefore posted to the credit side. 3. Discount allowed. Must be reduced from credit sales after settlement. It is posted to the credit side of control account. 4. Discount disallowed should be added back, therefore posted to the debit side. 5. Cash from customer. Money received for settlement must be deducted from credit sales to get the balance, therefore posted to the credit side. 6. Carriage outward cost of carrying goods to customers must be debited, thereby adding it to sales. 7. Bills receivable should be credited. 8. Dishonored check should be debited, to add back the amount to the value of sales.
For total creditors control account.
1. Credit purchase. Creditors is involved. I purchase from a creditor on credit. He gives out, therefore credited to purchase ledger control account. 2. Returns outward. Creditors who sell on credit receives back the goods a business returned, therefore return outward should be debited. 3. Check or cash paid. Creditors receive the check or cash paid in settlement of credit purchase, therefore check paid should be debited. 4. Discount received is given by a creditor, therefore creditor's control account should be credited with discount received. 5. Cash refund should be posted to the credit side. 6. Discount received withdraw should be posted to the credit side.
The difference between debit and credit side of total debtor control account is termed closing account receivable, also known as balance carried down.
The difference between the debit and credit side of a total creditor's control account is termed closing account payable, also known as balance carried down.
Here is the question for the
control
day.
account is also known as A. Commanded account, B. Total account, C. General account, D. Documentary account. Leave your answer in the comments section. Award goes to the winner. Thanks for watching. Please subscribe, so you would be updated on the release of the next video involving calculations in control account. Yeah.
Don't forget to like and comment.
Also, we would be releasing videos on how to score above 300 in Jam.
Thanks for watching.